Before we begin, remember that this video is for educational purposes only and isn't insurance advice. Always consult a licensed professional for your specific needs. Most people overpay for insurance because they don't understand this one thing. Are you tired of seeing your car insurance rates climb every year while you're a safe driver? Most people pay hundreds more than they should because agents don't always volunteer the hidden discounts that cut into their commissions. Today, I'm revealing the 5 specific areas where you can claw back your money right now. Alright, let's start with the real-world problem. Many of us are still paying premiums based on a 40-mile daily commute that no longer exists. If your lifestyle has changed, your bill should too. If you drive less than 7,500 miles a year, you're statistically a much lower risk, but agents rarely check your odometer. Most companies have a low mileage tier that can drop your premium significantly if you simply update your annual estimate. Don't wait for them to ask, call, and provide your current reading to see if you qualify for a lower bracket. Usage-based insurance programs use a plug-in device or a smartphone app to track how safely you drive. While some fear the Big Brother aspect, safe drivers often see discounts of 10% to 30% that aren't available to the general public. It's a trade-off. You give up some privacy for a massive reduction in your monthly cost. When you first signed up for insurance, you likely estimated your commute to the office. If you've moved closer to work or transitioned to a hybrid schedule, that distance is likely outdated and costing you money. Verifying a shorter commute distance can trigger an immediate rate adjustment that agents often overlook during annual renewals. Your job or your education might actually be a secret weapon for lower rates. Insurance companies love certain professions because of their statistical safety profiles. Engineers, teachers, scientists, and first responders are often viewed as lower risks by actuarial tables. Many insurers have specific affinities discounts for these professions that aren't automatically applied to your quote. Always mention your specific job title and ask if there's a preferred rate for your industry. Your college degree is worth more than just a job. It can actually lower your car insurance. Large insurance carriers often have partnerships with university alumni associations to offer exclusive group rates. Check your university's benefit page and see which carriers offer a 5–10% discount just for being a graduate. If you bank with a credit union instead of a major national bank, you might have access to member-only insurance pricing. These institutions negotiate bulk rates for their members that the general public can't access. It's worth calling your credit union's benefits department before you renew your current policy. Quick reminder, this isn't personal advice. Policy terms and rates vary, so always compare and consult a licensed agent. How you pay is sometimes just as important as what you pay. There are administrative discounts hidden in the boring part of your policy. Paying monthly is convenient, but it usually comes with installment fees and a higher base rate. By paying the full 6-month or annual premium upfront, you can often save between 5% and 10% instantly. It eliminates the administrative cost for the insurer, and they pass that savings directly to you. It sounds small, but opting into electronic funds transfer (EFT) and paperless billing can shave $50 to $100 off your annual bill. Insurers prefer the certainty of automated payments and the lower overhead of digital mail. Most agents won't push this because it doesn't change the coverage, but it's an easy win for your wallet. If you wait until the day your policy expires to shop for a new one, you're missing out on the early shopper's discount. Many carriers offer a better rate if you sign a new policy at least 7 to 10 days before it actually takes effect. They view proactive shoppers as more responsible and less likely to let their coverage lapse. Your car might have features that save the insurance company money during a theft or accident. If they don't know about them, you don't get the credit. Standard alarms are common, but active recovery systems like LoJack or manufacturer-specific tracking like OnStar can lead to significant comprehensive coverage discounts. These systems make it much more likely that a stolen car will be recovered quickly, reducing the insurer's total loss. Make sure your agent knows exactly which tracking system is active on your vehicle. VIN etching involves permanently engraving the vehicle identification number onto the windows and major components of your car. This makes the car much harder for professional thieves to resell for parts. Many insurers offer a specific discount for this because it acts as a powerful theft deterrent that's visible from the outside. Most people think defensive driving courses are only for teenagers or seniors, but many states mandate a discount for anyone who completes a certified course. Spending $25 on an online 4-hour course can sometimes save you 10% on your liability and collision coverage for 3 years. It's one of the highest returns on investment for your time. The way your household is set up on paper can drastically change your premium. Small tweaks to the who and how can lead to big savings. If you have a student on your policy who is away at college, more than 100 miles from home without a car, you can get a massive discount. You keep them covered for when they come home on break, but you aren't paying for daily use. Agents often forget to ask if your kids have moved out for the semester. While bundling is usually cheaper, there are cases where a high-risk driver in your house is dragging down the discount for everyone else. Sometimes, putting a driver with a clean record on a separate policy can actually be cheaper than the multi-car discount with a high-risk driver included. It's worth running the numbers both ways. Insurance companies often use price optimization models that actually raise rates on loyal customers because they know you aren't likely to leave. Every 2 years, you should shop your rate even if you're happy. If your current agent won't match a lower price, they're essentially charging you a loyalty tax that you don't have to pay. That's the practical version of what matters most. The big idea is to understand that car insurance isn't a fixed cost. It's a dynamic contract that you can negotiate by knowing these hidden levers. Don't wait for your agent to save you money. Take these points to them and ask directly. If this helped, like and subscribe for more practical guides that help you compare costs, understand quotes, and choose the right pro with more confidence. If this saved you money, like the video and share it with someone who needs it. Thanks for watching. Remember, this is educational content only. Talk to a licensed insurance professional before making any coverage decisions. Subscribe for more plain English insurance guides.